Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Doug Dyment from Gatekeeper Systems to give us an update. Gatekeeper Systems trades on the TSX Venture Exchange under the symbol GSI and on the OTC under GKPRF. The company is trading at about 73 cents with roughly 89 million shares outstanding, or about a $65 million market cap. I'd now like to hand it over to Paul Andriola.
Awesome. Great. Thank you, Trevor. Doug, welcome back. We had you on here a few months ago, and we wanted to get you back to talk to our listeners because you had a really strong quarter, and there's some other updates that you put out since we last spoke. So, great to have you back. But why don't we start off by just a brief description of the business for those that aren't super familiar with Gatekeeper.
Sure. Yeah, appreciate you having me on again, and just a high-level brief description of the business for the people that don't know Gatekeeper. Gatekeeper is a proven technology provider. We use AI and video analytics to really enable a safer and smarter city applications. We protect people in transit by providing end-to-end solutions that collect data out at the edge, being video integrated with voice, GPS, vehicle sensors. And really what we're doing is we collect this data that allow our customers, whether they're in the K-12 market or whether in the transit market, using trains or buses, or even other military markets. We collect this data for them to allow them to make those critical decisions that they need to make, to protect their riders. In some situations, it could be they're collecting evidence to protect themselves against false liability, or in other situations, they may be protecting children, on buses or in and around buses, when they're boarding or, getting on the bus or getting off the bus. So, and then we've got software applications that are easy to use and help them better manage the data that we're collecting. So from a high level, that's what we do. We've got 3,500 customers, and that number is growing. We've got 28,000 connected devices out there, that are able to, collect this data. And that number is growing at a rate of about, roughly about 5,000 devices a year. And we're adding more software applications, so I think the market is starting to become aware, that Gatekeeper is transitioning from your traditional hardware company to more of a data play, right? So I see plenty of upside from here for sure. And I think this last quarter the numbers that we just recently put out is a good example, of what we're delivering to the top line and the bottom line.
Awesome. Well, on that note, let's talk about some of the financials, because on an annual basis, you guys, you had a pretty good lift from 13.7 million in revenue up to 20.3 million for the year. So it's a 48% increase. More impressively, the fourth quarter saw a 58% revenue bump. Explain what's happened over the last year, and specifically Q4.
Well, it's been a culmination of things, Paul, you and I have known each other for several years, and we, I'll take this right back to when we did a financing. I think it was in 2017 of 4.2 million. We and believe it or not, we still have some of that cash left, so we spend smartly, but we're investing in our business, and sometimes it just takes time. We invested smartly. And what you're seeing is really a combination of things that have transpired over the last couple of years. Like we're getting to a point where, some of the seeds that were planted, some of the infrastructure that was built, out in the U.S., it's starting to deliver, right? And so these numbers that you see in the fourth quarter, and quite frankly, for the last I suppose 6 or 7 or 8 quarters, they're just they're an indication of what the company's capable of, right? And I expect that we're still going to be lumpy, at times from quarter to quarter. but you know, we're projecting growth, you know, year over year, you know. So what's changed, I suppose, specifically is, you know, Gatekeeper has become a significant competitor in the big transit market, and the transit market is broken up into a number of different categories. We're strong on the, you know, on the transit buses with, you know, with Southeast Pennsylvania Transit Authority, and we've broken into the train market, you know, so that's opened up, you know, revenue for us. But what's really cool, right, is that our software application is being used by the 6th largest transit authority in the country, or in North America, and love it, you know, and you know, so that's what I'm most excited about. I'm excited about the fact that you know, that they're using our application to you know, kind of make their lives easier, I suppose, when it comes to managing the data that our devices are collecting, because that's the key point. If you can, you know, if you can get these customers engaged in your software applications, now we start to set ourselves up for this recurring revenue model moving forward. So talking a little bit about that, you know, we were probably, I guess, about 12 or 13% of the overall revenue was recurring revenue. And the majority of that came because of this software application that SEPTA is using, you know. So it's just starting, but it's got, you know, significant growth upside, you know. So think about Gatekeeper as a company that, you know, collects this data out at the edge, and then we use these cloud-based software applications to monetize that data. That's the pitch for the future, right? And you know, and like I say, you know, the results that we showed last year, which by the way are continuing in the, you know, in this quarter, this first quarter, which traditionally is our weakest quarter, the first 2 quarters. You know, so it's an indication that we've got some good momentum, you know, and what we've built, how we use that $4.2 million, say, data back to 2017, it's really put some fundamental building blocks in place for this company, you know, to support future growth.
So you talked about, you know, sort of the golden, whatever you're going to call it, but the recurring revenue component right now is in the sort of the mid-teen percentage of your overall revenue. Where could you see it? And so what do you hope to see in terms of a percentage of overall revenue coming from recurring revenue?
Yeah, well, my goal is to, over the next 3 years, to try to get us to, you know, 50% of our overall revenue being, you know, recurring, right? You know, and I see that one of the things that the investors can look for in this company is, and this is going to be interesting to see how the market reacts to this. You know, I have always believed that the hardware is a race to the bottom, right? You know, and that's why software applications are a key component to the success of certainly of our business. But you need the hardware and the total system solution, you know, to drive that recurring revenue, right? Because you got to collect the data. So you're either relying on other people's hardware and you're coming in as just a software provider, or if you're an end-to-end solution provider like Gatekeeper, you know, we can sit back and we can create these applications that provide ability to connect to that data and then monetize the data in different ways, you know. So I see ourselves, you know, moving towards a 50-50 split in the coming years, and it's going to be done. You know, my vision is to leverage the current platform, you know, on either school buses or transit buses. I'll use those 2 markets because they're a couple of our primary markets, but leverage that data in a way that when we come in with, say, our TIMS software application as an example, that's our traffic infraction management system, where we can manage stop arm violations, or this new burgeoning market called lane infraction, and you know, for the transit market, where transit authorities may be issuing you know, citations for vehicles that are in you know, bus lanes or parked illegally. That's all part of the video enforcement marketplace that Gatekeeper is just scratching the surface now, you know. So I see us leveraging that platform already paid for by transit authorities, and then we come in with our software applications to, like I say, monetize the data. So I don't ever see ourselves, Paul, really being outside of the, you know, the capital money, because we're an end-to-end solutions provider. So for instance, SEPTA I'll use SEPTA as an example because they're such a dynamic account for us. They've already disclosed that they're going to be spending somewhere in the neighborhood of 30 million, I guess, in the next 5 years. There's information out there that if you look closely enough, you can see in their budget that they're going to spend somewhere in the neighborhood of 20 million US this year, right? That's their plan, right? So somebody's going to win that contract, right? I'd like to believe it's going to be Gatekeeper, and I feel pretty darn comfortable that it's going to be, given that there's no guarantees, of course, but we're in a strong situation there. So when they collect that data from the internal systems on their buses, they can, if you add a different sensor, forward-facing sensor that can read license plates, now you can actually leverage the data into lane violation and parking violations and pump it up into our cloud-based software application. So we've been working strategically in that particular account, like we plan to work in other accounts, to drive that recurring revenue, which gives me the comfort that I could see us working over the next 3 years to this 50-50 split, right? And and I'd also like to point out that on our hardware and bundled software business, which you can see the margins sliding a little bit, right? Most of that is due to the fact, and I'm talking about over the last couple of years, we're about 41 to 43%, somewhere in there. There is the potential for that to slip a little bit farther, but just because of some of the accounts that we're working on. But I see that as only a short-term issue, right? And so what we did to offset that is we made darn sure that that this company could get profitable, even if under the current environment our margins slip even below 40%. So I think that companies should be in that type of a mode where you can't just go out and raise money and continue to dilute the company. You got to get your companies profitable and withstand some of these stormy weathers, such as going on right now. And that's what Gatekeeper's done. That's one of the reasons you're starting to see significant money thrown to the bottom line. And because once we get through this, and I'm a firm believer that President-elect Biden is going to be a different negotiator with China, and I think it's going to affect our the 7%, approximately 7% hit that we take on our gross margin right now. I think you're going to start to see that layer back up, and then because we've streamlined our operations to be effectively profitable, even in as low as depending on what the top line looks like, into the 30s as far as gross margin, you're going to start to see, this company layer on profit, once we start to see some of those, maybe some of those changes with the trade war that's on right now.
Doug, the strategy is not very dissimilar to a lot of sort of SaaS style businesses where your long-term value of your customer is so high that you're prepared to spend a lot of money to get that customer. So in essence, you're installing hardware at reducing margins because of the value of the long-term data contract. Is that correct?
Yeah, you're absolutely right. I don't promote it that way, but you touched a hot button, right? So that is in essence what we're doing. However, we're fighting hard to keep that margin above 40 and heading back towards 50%, because what we're doing is we're giving them our customers a software application today that's bundled with the hardware.
Yeah.
That's traditionally had enough value to keep the overall system margin at a reasonable point, right? So if you strip off the trade war, right, we're back up around high 40s, which is pretty healthy for a company that would be considered a hardware-based company.
Exactly. So speaking of hardware, though, now you guys are starting to announce some new products that you're putting into sort of called the ecosystem. Why don't we talk a little bit about any new products you've talked about or launched here, and ideally sort of what the future looks and sort of what direction you're going with any sort of new initiatives or new products.
Yeah. So what's kind of interesting is that, for investors, is that Gatekeeper has so much value, hidden value on our balance sheet, right? In our company. It doesn't, you don't see it in numbers, but I'll give you an example. All of those investments that we made in the school bus market, in our TIMS application,
Mhm.
Is all cross-pollinated into the transit market, where we start getting into lane violation, right? So to your point, we are, I don't want to disclose what's happening, in one of our key accounts there as it relates to lane infraction. That's just a little bit too close to disclosing something that might hurt us from a competitive standpoint, right? But, I believe that the video enforcement market, I'll word it this way. I believe the video enforcement market for transit has enormous upside for this company, right? So that is one area that we are going to be layering on software applications to drive revenue from and this is interesting, right? From a perspective of not increasing our sales and marketing cost, because we've already got the customer, right? So that's where you're going to start to see this, this layering on of bottom line profit for this company. So I want to talk a little bit about the margin mix, because at the moment, our standard products typically are high 40s on the margin. With the tariff in, we're knocked down to around 41, and sometimes we'll be as low as 40, or maybe even a little bit lower, depending on specific situations in a particular account. All right. When you start getting into the services business, that's that contract, that $12 million contract, as an example, with SEPTA. That's when you start getting into, in and around the 60%, margin, right? Which is quite healthy. But when you start layering on other software applications that we're working on to, say, monetize the data in the K-12 market for parents, I'll use this as an example. We are going to be providing a parent app that allows parents to be able to see where their bus is on the route, so they know when the bus is going to be arriving at the stop, and they can make sure their kids are there. And in addition, when the bus is on the way home, they can, they'll know where the bus is at the stop, so they'll know where their kids are. So that would be an example of monetizing the data that we're already collecting, right? And just layering on an application and taking anywhere from, could be 55 or 60% gross margin, all the way up to 100% gross margin. It depends on the application and some other factors. So that's one application. Lane infraction is another. The stop arm camera business is still there. We're working on a project in two key areas. One is Ontario, and another is I'm not going to name the state, because it's a competitive situation, but it could open up the whole state for Gatekeeper. And so I see that business still being there. There's still this problem of about 16 million children that are at risk because of these stop arm camera violations. And then I see I see us moving forward. I'll touch on something that I think is going to be quite interesting, for Gatekeeper, because this next comment really has to do with how a company like SEPTA is looking at their data. They look at it differently than the school bus market. They're more focused on evidence to defend themselves in court of law. When you start looking at evidence to defend yourself in the court of law, now you start to sneak into the law enforcement business. And you asked me a question, or somebody did. I can't remember. Maybe it was last time we talked about. It might have been one of your questions that came in from your investors about the law enforcement market and body cameras. And at the moment, I don't have any plans to go into the body camera business. But in the future, I see ourselves getting involved in the evidence management business, because we are landing law enforcement type deals. It's not a big part of our market at the moment, but our past platform, this platform as a service, it is cross-pollinating to in the prison market, ambulances, and some law enforcement. I just don't position ourselves that way, because I don't want to be looked at as a competitor to Axon, or now Motorola, right? So we just kind of fly under the water, if you will. And but in the future, I see ourselves getting more into evidence management, which is a little bit of a different software application. But the data that we're collecting, that is the evidence, So again, it's that hardware, get customers pregnant, and then come in with, with multiple software applications to monetize the data in different ways at higher margin.
Gotcha. Let's talk about a product that you just news released, but or initiative, I guess. Temperature check for
Yeah.
well, a variation of things, including even some golf courses or golfing. What can you tell us about that?
Yeah, so that started obviously with you know, creating a product that could check temperatures of children loading school buses. That's where it started. We're getting some interest from transit. We're just now, you know, launching a program to 50,000, all 130,000 schools. You know, there's about 16,000 districts, and we're heading, you know, we're pushing out to 50,000 different titles, right? Because there's a number of different individuals or titles inside of the K-12 market or the school district that could be influencers in different areas. You know, so you're not just talking school buses, you're talking exits and entrances to buildings, that sort of thing. You know, so that's where it started. This recent, you know, and we've got some, you know, we've got some sales in small businesses, not a lot yet, because, you know, as we move forward, if we're gonna start to segment off some of these other marketplaces, we're gonna have to build teams, you know, to really focus and be effective in those markets. So we're planting seeds, and the VGT, the Vancouver Golf Tour, that's a seed planted, you know, and I think it's a beautiful application because you got so many sports, you know, that want to come back. Some of them are forced not to be able to, you know, so this gives them a layer of protection right at the edge, and being able to, you know, protect not only the staff, right, of the you know, of the tour itself, the Vancouver Golf Tour, but also the players, right? You know, so we're actually in the process of making the device portable, and we'll be delivering those systems for when, you know, the Vancouver Golf Tour, you know, heats up in the, you know, in the spring. They just finished off their winter tour, and
Mm-hmm.
you know, there's a direct connection, you know, between golf and investment, and now product sales, and I'm loving it because I'm a big golf fan, of course.
Two birds with one stone. Perfect.
Yeah.
I'd be remiss to, sorry?
I was going to say I could turn my computer sideways if you like, but because I've got it on my wall here, I've got Tiger Woods with every Masters champion all up on the wall here, so it's unique. It's a unique piece for sure. I look at it every day.
Yeah, perfect. You tried to get me out golfing a couple times, and I've saved you the punishment. Maybe one day I'll take you up on it. But I need to ask you. So you also did announce a financing a little while ago, but I haven't seen any news as far as closing the financing. Maybe can you give us a couple, you know, brief seconds on the financing?
Yeah, I appreciate you giving me an opportunity to talk to that, because I addressed this head on in our recent AGM just just a couple of days ago, and you know, so just starting back to the very beginning, I wasn't, you know how I operate, right? Like I said, that last financing that we did in 2017, we still have cash in the bank from that, and you know, so I wasn't doing a financing. At the time back in August, we had about 8 million in working capital. Today we're up to 10 million in working capital, you know, so the company doesn't necessarily need to do any type of financing when the stock was trading at 50 or 60 cents. And but the offer came in, I said no. They came back with something that I just couldn't refuse, you know. So what I did was I agreed to $1 a share with a tight warrant. And, you know, we got our sub-agreement signed before I flew down and met with them on the East Coast, sat down with them, realized at the time that, and I'm giving some details that obviously weren't in the, you know, in the news releases, right? But I spoke to this in the AGM. You know, I realized at the time that it wasn't going to close in a couple of days. So I immediately blacked out all of our employees, our directors, all the insiders. Nobody was allowed to exercise stock options or buy or sell stock. So I got that taken care of, then immediately announced the financing, because I knew I couldn't keep this, you know, under the sheets for very long, you know, given, you know, it was a 58% premium, I believe, to market. So, but one of the things that was evident as we moved forward was that they had their compliance issues. And I think even, you know, the CIO that I was dealing with didn't realize, you know, some of the issues that they were going to have to deal with. So they just continued to ask for extension after extension. I showed patience because it was an important financing for the company as it related to currency. It didn't necessarily, it wasn't that we needed it from an operations standpoint, right? So anyways, showed patience there. And finally it got to the point where I just said to them December 1st, look, go get your, go get your house in order as it relates to these compliance issues, and then come back to us, right? And I had this, I knew I had this material event right around the corner. I figured we were going to be launching our, or filing our financials somewhere between the 10th and the 13th, which was typically early for us. So I didn't want that in the mix. And, so we just let the December 1st date expire by the exchange. And now we're still in discussions with them. This is a group that wants to invest. And we'll see, we'll see how things, work out here in the coming weeks.
Perfect. We're almost out of time here. So what I always like to do is leave it with you to give any kind of parting message or any key points that we haven't really touched on, or even if we have that you want to double down on. But what do you want the investors listening right now to walk away from with?
Yeah, I think number one, it's important to know that Gatekeeper's balance sheet is, I'm told, is one of the cleanest balance sheets in the, in the microcap space. Mm-hmm. Our income statement is rock solid. We have a lot of customers. We are growing. Like I say, there's still going to be some lumpy quarters in there because some of, a large part of our business is project-based in government. So we have no control over some of the timing of that. But we're in a position where the only reason that I would financing from a dilution, I'll talk a little bit about dilution, is if there was some reason to do it. But if you look at what we've done, Paul, over the last little while, we put ourselves in a pretty good position to leverage debt at low interest rates to take care of these projects, right? And that was a difficult thing to do when you're losing money. So we got that taken care of, and that really protects shareholders, from a dilution standpoint. So I would if I was investors, I'd keep a close eye on, and this is a little bit tricky because I've never been somebody that will issue news if it's going to hurt us from a competitive standpoint. That's a fundamental, that's just a fundamental way of the way Dyment operates. And I'll always protect our shareholders by protecting our business first. So there could be situations where you don't necessarily hear about what's happening behind the scenes, and then bam, there'll be some interesting things transpire. So as we build out our software applications, if I was an investor, I would just not necessarily worry about, if I could say this, maybe what their statement looks like at the end of each month, right? Because this is a real company and it's not a promote, right? This is a real company that I have a goal to grow this thing to $1 billion valuation, and I believe we're going to do it, right? And so it's going to take time, but this year, this is another important year for us. It's a tough environment. And I think that companies like Gatekeeper, we can really do a great job building a base business, somewhere between 20, 30, 30, maybe 35 million, in a real tough environment, and getting ready for that next level of growth. We'll see how the market values us, but I'm a believer that we can, communicate strategically to our capital markets, that they'll start to realize that this company is going to, I believe we're going to start to gap at some point in time, right? Because of software applications that are leveraging the data we're already collecting at higher margin. And we'll leave it to the analysts to, that's another thing. Analysts still haven't picked us up yet, and funds are looking at us now. It's only a matter of time. Like, they can't ignore us forever with these kind of things that we're putting out, right? So we'll see. I think it's a good buying opportunity right here. And I don't think I've ever been, I've been excited in the past, that about our business, but man, we've put a lot of hard work into building this company, and now it's time to leverage that hard work, right? And start to scale it, right? I'm going to work hard to make sure that we protect that bottom line, just as we're trying to grow the top line, right? So.
Well, fantastic, Doug. You know, I've watched you now for several years. You guys have done a spectacular job of growing the business. Obviously, lots of challenges, especially this year, but you guys have managed to leverage some of the opportunities into fantastic growth. I'm really impressed with the fact that you guys are now starting to see some good mix of recurring revenue in your business. So that looks fantastic. And then, you know, I think a lot of investors can look forward to a number of catalysts here with some new products, new initiatives, and quite likely some new contracts. So I want to congratulate you and certainly thank you for giving us this update. And look, we look forward to the next big milestone, next big update.
All right, Paul, Trevor, appreciate as always, I love talking to you guys and appreciate your support and look forward to reporting back, you know, some positive results next time we talk.
Awesome. Thanks so much.
Okay, thank you.